Podcasting from a remote location somewhere deep in the heart of New York City. This is Crypto Characters, and I'm your host, Jason Nagy. Our guests for today on take 3 of this introduction is Jack Tatar and Ron Kochman. Jack and Ron are both managing directors of Doyle Capital Management, which focuses on investments in transformative technology, including blockchain, AI, and distributed computing. And Jack is the head of the Cryptoassets Working Group for Wall Street Blockchain Alliance. He's also published, is it 1 or 2 books, Jack?
I've published a number of books, including books on retirement, but 2 on Bitcoin, including Cryptoassets, The Innovative Investor's Guide to Blockchain, to Bitcoin and Beyond, which I wrote with Chris Berniski.
And you're also the, is it managing editor or editor of a Forbes periodical as well?
I'm editor of the Forbes Cryptoasset and Blockchain Advisor newsletter.
Okay, all right. So guys, welcome to the podcast. Thank you for coming on.
Thank you, Jason. Thanks for having us.
Okay, so let's talk about how you guys got together, because you're a fun crew to talk to, and I'd love to hear that story, how you started out.
Well, Ron and I, we went to college together. We're a couple of Stony Brook graduates out there. We were actually Patriots before they were Seahawks, Seawolves actually. And we had our own careers
Is that the name of the team in Stony Brook?
Yeah, the Seawolves.
Okay.
Seawolves. They used to be the Patriots when we were there, but now they became the Seawolves.
What do they play? Softball or football?
No, football. We have Division I football.
And basketball.
And basketball.
Really?
And you ask, what's a Seawolf? We are.
There you go. All right.
So I would say back in 2013, when I wrote the first book on Bitcoin called What's the Deal with Bitcoins, I got very involved in Bitcoin, and Ron and I had always been very friendly with each other in terms of investing and the sort. And we got involved in investing at that time, not only in Bitcoin, but in a number of early stage seed investments with a number of companies in the crypto space. Many names that you know now that we were involved in at the time. And we did that for a number of years, and then we were involved in, specifically in an entity, in a venture called Lawnmower, that we were very much involved in mentoring and working with this small team. And the company was sold to CoinDesk, which was one of the first exits that was done in the crypto space.
What did Lawnmower do?
Lawnmower actually created the first application, mobile application, and what it allowed you to do is it allowed you to actually buy crypto by rounding up your charges. So let's say you made a charge for $1.50, it would round it up to $2, and the 50 cents would go into Bitcoin.
Gotcha.
And at the time that the company was created, we actually made a lot of people very wealthy, even for a little bit of money, because it was at the early stages of Bitcoin.
When was that?
Lawnmower was around 2014, 15, okay?
Yes.
So we were very much involved in mentoring businesses. Ron can tell you a little bit about his background, but we got very much involved with helping out a lot of early stage businesses. We worked through much of the ICO boom, but we also saw during the ICO boom, pretty much at the peak, that it was unsustainable. And we really started to advise companies that we were getting involved in not to go the ICO route. And we saw a real value in the more traditional venture capital model and funding businesses and mentoring businesses. And that's what we've been doing now. And then when I wrote the book, Cryptoassets with Chris Berniski, we really saw the interest or the appeal of crypto assets as an investment tool for the typical investor. So that's kind of led me into working closely, I think, on some things we're going to talk about later. But in our creation of investments and what we've been doing, we've ventured into less of a focus on crypto, more of a focus on what we call transformative technologies.
Why is that?
Well, because
started with crypto. What drove you to the transformative
Well, we actually,
technologies?
what's interesting is if you go back to our investment style, we were actually investing more in transformative technology even before crypto. Crypto kind of fit that model.
Right.
And now we see a lot of value in companies that are not specifically crypto based, but are in the trends, in the transformative technologies and new trends. We're liking things in distributed computing. We're liking things in the decentralized finance area. So I guess my point is that our investments are no longer strictly in the crypto area, but in companies that we think really have some, are writing some of the trends for the future going forward.
So I want to talk more about the 2 books that you wrote, but Ron, let's hear a little bit about you. What drew you to the crypto space?
Well, again, talking to Jack over the years, after Jack did his first book about what's the deal with Bitcoin, he piqued my interest, and we were discussing it for a while. And when the lawnmower project came up, again, it wasn't really an investment in crypto. What it was an investment in an investing platform where they were allowing, the first one I've ever saw that, besides the spare change concept that Jack was talking about, they also put in a thing where you were able to buy, just like with normal investing, dollar cost averaging, they let you go for repetitive purchases, anything is from $5 to $10 or $100 or $1,000. You could do it either weekly or monthly, buying Bitcoin or ETH at that time. I think maybe those were the only 2, maybe Litecoin was the third one, that let you buy them on a repetitive basis. So rather than buying $5,000 worth of Bitcoin at once, you could do over 50 weeks to $100 a week type of thing, and you would dollar cost average, and that made a lot of sense. But before I got involved with Jack on that end, I had been a CEO of a Fortune 1000 company, and when we got involved in the space, I was very interested in not only making money, but working with young CEOs, and helping them grow a business. Jack mentioned about the ICO boom, and that's really what sort of drove us crazy. It got to a point where, I hate to say, some kid working out of a basement or his parents' garage could write a white paper and put up a website and raise $20, $30 million through an ICO. And we were just under the impression that these projects were never going to get built. The young people may have been smart, but they had no idea how to not only run a business, but how to set up a business, how to set up an organization, what sort of HR policies and things like that needed to get done and be involved in. So,
well, before you move on,
yep.
I want to ask you something. So, without saying the actual name of the entity, let's say that you're talking about, I'd love to hear your best example of the worst that you saw.
The worst and best example is the same one. We actually made a very small investment. I think we put maybe $5,000 in each into a company, and got a token drop that I think was up somewhere maybe 15 to 20x on it.
20, 30x actually.
20 to 30x on it the day it came out, the day they actually, released the tokens. And the next day, or maybe 2 or 3 days later, saw a picture of the CEO in his brand new Lamborghini.
It's like the Lambos to the moon thing.
Lambos to the moon.
About,
and that day we spoke, and I said, Jack, this thing's never going to get made. And it's like, let's just get out of here, because you can't. Running a business is hard enough. Setting up a business and putting infrastructure in place, getting the team right, understanding what needs to get done. Do we need a 401k? What about health insurance? What about HR policies? What about segregation of duties and internal controls? They have no experience with this, and to throw $20 or $30 million at somebody and say, yeah, go get this right on your own, it's ridiculous. And it's you're going to have a 95% fail rate when you start off like that.
The ICO boom was kind of a double-edged sword from my perspective, because it was something that democratized the fundraising mechanism. I mean, I've worked in Wall Street for 20 plus years, And to get an IPO or to get shares of an IPO, it was virtually impossible as a retail investor. So, and to raise money to build a business, it was very tough to do. All of a sudden, here comes crypto and here comes the ICO boom, and it was an easy way to raise money. So there was a lot of value in that. But because of the amount of money that went to this, it was untenable. And then it also created, to RK's point, it created a really an environment that was not healthy for young entrepreneurs to build.
By the way, the camera keeps going to your hand. So
oh, it does, because I keep tapping.
There's a little circle around it.
He's good at Morse code.
I'm practicing my Morse code, sorry.
That's right. And you are, right?
I am, yes.
Are you going to be a shipman somewhere?
Well, no, I'm Kilo 2 Whiskey Lima Delta, so that's my call sign for anybody out there on the airwaves.
Well, and now they know who you are. That's dangerous.
Well, no,
right?
That's all right. That's all right.
Are you a former trucker? What got you into Morse code?
No, that's CB. That's CB radio. That's very different. I'm a ham radio guy. So
Okay.
whenever everything goes down and the zombie apocalypse hits, I'm going to be everyone's best friend, because I'm going to tell you where you're going to find your way out.
Right.
So, anyway.
CBs are Smoking the Bandit. Ham radios are Unabombers. So.
I see. Okay, well, there you go. Now it's all clear. I finally
I digress. Sorry. I stopped tapping, okay? It's your fault for putting the vodka in the glasses.
It's nothing but the best for
I
my
mean,
guests,
it's pretty
right?
good. It is pretty good. So.
All right, so, I interrupted
I made
your
a
flow.
profound thought.
Yeah.
I had a profound thought.
Do you remember what
So
it
we
was?
need to move on then, probably.
Okay.
All right. I don't have too many of them in me, so.
We were talking about the crypto craze, essentially, and the problems that you saw with it. What do you think the height of it was? Where do you think it got absolutely the craziest? Was that in July of 2017? Was it before the Dow report, or was it after the Dow report?
The
SEC, when the SEC issued the Dow report in July 2017, saying that the tokens that were raised under the DAO organization were securities.
Well,
Or was it in December of 2018 when Bitcoin hit? Did it track Bitcoin more than anything else?
I think
Yes.
Right?
Yes, because remember, everybody was raising money based upon a conversion of tokens from Ether or Bitcoin, and it was, anybody who had Bitcoin or Ether felt that they were rich and it wasn't going to end. And once, in December or January, of 18, when Bitcoin hit, $20,000. Everybody was buying Lambos and figured you could throw a dart and miss the wall and still make money.
It's true.
I guess one of the ones that for me was a sign was Filecoin.
Oh yes.
When Filecoin raised over 100 million, right? Well,
Yes.
over 100 million.
Saying nothing bad necessarily about Filecoin.
Oh no,
just at that
but-
rate.
the concept, but it was essentially raising money on a promise.
Yes.
It wasn't even on a valid building of a product. It said, give us the money, we'll go back and build it, and we'll come back to you
In 2 years.
in 2 years.
2 years. We'll come back.
In 2 years. So at some point, it was our belief that this just was not going to work for the individual investor. And if the SEC is doing their job, they're going to step in at some point, which I think has, obviously created a bit of a mess that we're in right now with trying to get some clarity from the SEC. But I do think they're getting better. But in terms of the peak of the market, it's very interesting because, like I said, I come from the financial service side. What to me was very interesting is once we started to get involved with futures, the futures market, and all of a sudden Wall Street started to get involved with this. And we started to see it up on CNBC on a daily basis.
That's right.
It was kind of like, this is probably too much too soon as it was happening. And I've always been a proponent of allowing the individual investor to invest in Bitcoin as an alternative asset, but to see what went on with the price rise in the futures market because Wall Street had gotten involved, and then crash pretty much right after that.
Yeah.
It's pretty, there's got to be, it's not a coincidence.
No, it's not. I'll tell you why. right?
Okay.
This is why I get excited.
I like
and,
that.
And I know you
That's a
don't.
good point.
And I know you don't want me to call out individuals and
Yeah,
things
no, let's
like that.
not
which I
do
like to
that.
But I will call
For
you
your
out, Jamie
sake.
Dimon. No.
Oh, yeah, right.
Some of the questions. I mean, the futures market. If you think about it, futures market, what that did was gave institutions the first way to short Bitcoin.
So when you guys talk about the futures market with respect to Bitcoin, why don't you explain for the uninitiated, including me, exactly what you're talking about?
Oh, you won't understand it. But the futures market is simply that. You can remember up until that time you could buy Bitcoin and you could sell the Bitcoin that you owned.
But you couldn't do it institutionally.
You couldn't do it institutionally, right? But you could buy Bitcoin and then you could sell Bitcoin. What the futures is the underlying basis of the options market, right? I mean, they go hand in hand. And the futures market, you can say, oh, will Bitcoin be $10,000 next month? And you can buy contracts to bet on that, to speculate on that, to whatever you want to call it. And that's what the futures does. So like I say, before that, there was no way to short Bitcoin. You either bought Bitcoin or you didn't.
So now I understand the futures.
When I say short Bitcoin, means if you thought the price of Bitcoin was going to go down, there was nothing you could do as an investment vehicle to bet to bet on that, except for not holding Bitcoin.
Right. Okay. So what happened with the futures market? When
futures
did it open
market
up?
started in, what was it, December of 2017?
Pretty much right in line with when you saw the market skyrocket and drop. Because what you had is you didn't, there was no method for Wall Street or institutions to get involved in Bitcoin. And I've been saying this for years, that Bitcoin will only be sold to individuals and institutions will only get involved when they realize how to make money from it. That's why you still don't have the ability for a retail client who has, let's say, a Merrill Lynch account or Morgan Stanley account to buy anything in Bitcoin, because there are no products. There is no way for an advisor to make money off the product.
Right.
Even though it's in the investor's best interest to have even just a 1% allocation to Bitcoin and just say to their clients, go on to Coinbase, buy 1% of your overall portfolio and put it in Coinbase. That's being a prudent financial advisor. The returns are there, 1%. But they're not doing that because they don't get paid on that type of thing. So all of a sudden what comes along the ability for the futures market, which is a derivatives market. Wall Street learned how to make money now off of Bitcoin. That was the first way that they had figured out how to make money. Remember, they weren't making money on ICOs because ICOs were a democratic, decentralized way of funding companies versus the traditional model, which is an IPO model where you have the capital markets doing dog and pony shows and everything else, and the investment banks make money. They weren't making money off of that. So that was the first way that Wall Street found a way to make money off of these types of crypto assets. And accordingly, it ran up, and as RK said, it was the only way to short the market, and it came right back down.
Right. So I know Jason doesn't want to upset any individuals. So besides Jamie Dimon, we'll call out Charlie Munger and Warren Buffett. Just to get
I'm not worried about those
just to get
guys.
on the good side. Because again, my thinking is this also. If you think about those people, those people who have so much invested in the market and its infrastructure, and what the whole idea of Bitcoin or decentralization of financial markets does, they have so much at risk, right? That they have billions, trillions of dollars investments under management at risk. They could short Bitcoin all the way down for as long as they want, and it would still have that course would still be a positive return to their business. And I say every time you see a Warren Buffett calling it rat poison or Jamie Dimon calling it a fraud and a scam, you have to realize from their point of view what they have at risk and what they're trying to protect. And the more that they can as they like to say, FUD of fear, uncertainty, and doubt on the marketplace, the better it is for their existing investments.
They're protecting they're the status quo, and Bitcoin is a direct shot across the bow of the status quo, the financial status quo. In its core premise, it's what it is. Remember that Bitcoin was created really out of the financial crisis of 2008. Now, there were some attempts at something along the lines of Bitcoin before that, but when Satoshi created it, the Genesis hash actually referred to the financial crisis of 2008. Let's not forget that Bitcoin was created in 2008. So there's
when you say the Genesis hash referred to the crash of 2008.
The birth of Bitcoin.
The first iteration, first creation of the Bitcoin.
First transaction.
First transaction.
Mining of it.
Yeah, and so there was.
How did it relate to the 2008?
There was within the text of the hash that was stored in there was a reference to a quote from that day. Now, some people say it was to timestamp that with the news of the day, but it was actually a reference to in the UK a response to the financial crisis going down and occurring. So some people say it's a timestamp. The reality is it was created in 2008, and the reality is it was created as a new monetary system in response to the system that we have that was in place. So you will always have those who are the status quo, and they've been belly aching about it now for over 10 years, trying to fight it, but it can't go away. Now what we're seeing is we're starting to see a lot more of an embrace of Bitcoin and crypto assets by the financial companies. The first thing was derivatives and the futures market. We're now starting to see all this discussion about an ETF out there. And once you get an ETF, then all of a sudden Wall Street has figured out how to make money off of this. So
they shouldn't. Then Wall Street shouldn't be upset about Bitcoin.
No, they'll love it. They'll love it until they don't love it anymore. I mean, it's the same thing. There are so many problems that Bitcoin and others brings to the marketplace, because the same thing, it's a deflationary asset. Bitcoin is going to have whatever it's 21 million Bitcoin out there, and then that's it, right? I mean, you look at it. It goes against the dollar. It goes against the Treasury and central banks as well, right? I mean, the last I checked, the dollar was off the gold standard, and it's backed by what, the full faith and credit worthiness
of the United
States government. And maybe your audience can explain to me what that means, because what are they giving you? If you go back and say, here, give me my dollar's worth of something, what are they going to give you? They're going to give you nothing.
Whatever you can buy with it, right?
Right, which is, each year by you look at the deficits you run and everything else, what it creates. Your dollar today is worth 94 cents tomorrow, next year, type of deal. While Bitcoin is going to go the other way. If it's worth $1, it's going to be worth maybe $1.02.
You think it is? I mean, you think that it's always going to go up? It goes up and down all the time. Bitcoin. The value of Bitcoin.
Well, there's the case of do you view Bitcoin as a currency, or do you view it as a store of value? I mean, to our case point, there will only be 21 million Bitcoin ever created. There are 7.7 billion people in the world. Trillion people, maybe, I don't know.
No, it's 7.7 billion.
7.7 billion people.
But it's the visible. I mean, you go into decimal places, into Satoshi and stuff like that. I think Bitcoin will continue to go up simply because every currency run by central banks continues to go down. If you have a fixed amount of Bitcoin and you have increasingly more dollars or pounds or euros coming out, one's got to go in relation to the other, and less is always worth more than more.
I hear people say that, but I just don't know. It just seems like the values are always changing, no matter what you do everywhere. So I just find I'm just uncertain if that's always going to be the case.
Well, let me ask you a question. So let's go back to the full faith and credit of the U.S. government. Okay. Let me now. Jack. You do business with Jack. Let's say, right? Do
I know.
Let's say you know. Okay.
I don't know about
Now-
the business
no,
part.
no,
I give
no.
you the business.
No, but realistically, if you two agree that this, coaster is worth $1 or is worth 10 minutes of your time, right? And you two agree on that, okay?
Yeah.
So let's say it's worth 10 minutes of your time, okay? And you agree. So tomorrow, if Jack brings you another one of these and you say, okay, it's worth 10 minutes of my time, what are you bringing a dollar bill in as opposed to a coaster or a Bitcoin or something else? It's the same thing. As long as you two have faith in what this is worth, it's worth that. Let's go back to
Yes.
Let's go back to Bitcoin for a second.
Okay.
When everybody says, "Oh, it doesn't make any sense," well, what does make sense? Does this painting on your wall have a value? Why? Why does that have a value and Bitcoin does not?
So I've been listening to a lot of Thomas Friedman actually because
the world is flat.
exactly. No, he's not. No, I'm sorry. Did I say Thomas
Yes,
Friedman?
you did.
Yes, you did.
All right. Milton Friedman. Excuse me.
Milton Friedman. The world is round.
Well, you're free to choose. You're free to choose.
Exactly. That's right.
I
Good reference.
used to love Milton Friedman.
Because he talks a lot about value, and you come to he goes fairly deep into it. I don't really have an answer to what value is for anything. So I can't debate that.
Value people is what two people agree on.
That's exactly right.
Now let's come back to the point earlier about the dollar used to be backed by gold, and you hear a lot of people that say, "Oh, we should go back to the gold standard." Well, we can't go back to the gold standard because actually the value of gold is so much below what our debt levels are that there's no way we could ever
There's
go
not
there.
enough gold to
There's
go
not
in the
enough
gold
gold in the
standard.
world to cover our debt there. But people will point to the fact that now we have this piece of paper that had something solid of value behind it.
You used to go to the Treasury and say, "Give
Right.
me my gold,"
Right.
and they would.
Right.
Yep. I mean, in the 1800s. That's correct.
Right.
Right. Right. Or in the Old West, if you went with a gun, you'd get it.
That's right.
But so you have with Bitcoin, and obviously this pertains to adoption, acceptance, which I think we're seeing more of it. But if it's a store of value, the fact that it's a deflationary asset, meaning that we know how much of it will be created. 21 million at points beyond our lifetime at this point. Gold used to be pointed out. There's only so much gold. Well, we don't really know.
No one
we
knew
know
how much,
we don't
right.
really know how much gold. But gold is not deflationary. Bitcoin is deflationary
Why is gold not deflationary and Bitcoin is?
because you never know how much gold is going to be out there.
Because there's no way to actually know.
You're mining more each year. I mean, you've been mining more for the last 200 years, right?
Right.
Right.
Okay.
So there is a point where people
The
have to
supply
accept
has increased.
have to accept that Bitcoin is a store of value. But I think when you start to look at it and start to play that angle of it, less of it as a currency, then you start to come back to this digital gold model. And one of the things that I think you and I had talked about was there's an event that's coming up right now, which in about a little bit over a year, which is called the Halving.
May 2020.
Yeah, May 2020.
May 26th, no less.
Yeah,
as of now.
and I think it's of interest.
They actually know the date?
Yes.
Based
built
upon-
into the Bitcoin software. And remember, it's a piece of software. Built into it is the fact that it can only be created 21 million Bitcoin. But every 4 years, almost like what we end up doing every 4 years, which is we do our best to try and kill the country every 4 years with elections. But what Bitcoin
think we did it this time.
but
There's another one coming up soon, fellas. Don't worry.
but in Bitcoin,
I'm actually excited for the next election. It's going to be so much fun just to watch everyone go crazy.
Oh, I'm glad you're going to enjoy it. But I'm a little more excited about the halving. So every 4 years, Bitcoin halves the amount of reward to miners of Bitcoin. So the next halving, which will happen in 2020, the important thing that happens there is that right now, gold has been tracking at I think about a 3 to 4%, maybe 2 to 3% inflation rate. When Bitcoin goes to its next halving, the inflation rate for Bitcoin will, for the first time, be below that of gold. So there is.
Tell me what that means from a practical perspective, because
So
I get the words, but I don't know.
So arguments like Bitcoin has been growing. Remember, there were only, Bitcoin used to be worth nothing, right? You used to buy a pizza for 6 million Bitcoin, whatever it was.
Yeah, right. The first Bitcoin transaction.
Right. So they needed to, for all the processing power, the rewards had to be high, and to make it worthwhile to use your computer to mine,
Right.
and hold the transactions. But they seem to get everything right. The idea that they knew that Bitcoin would increase its price over time. So the amount of Bitcoin that somebody has to be rewarded for processing those transactions can go down, and they could still make money. If you were getting 10% of $2, you made 20 cents. If you get 1% of $500, you made $5. And if you're going to make 0.01% of $5,000, it's $50. So you're still making more money, even though the rate is going down by half each time.
Right.
So what Jack was talking about, the inflation rate, that just means that Bitcoin each year, Bitcoin there may have been 4% more Bitcoin mined last year. And now what Jack's saying is that at the halving now, that rate goes down. So next year, Bitcoin will only increase at 2%.
To its ultimate level out.
When you say it will only increase, you mean the amount of Bitcoin will increase?
The amount of Bitcoin, right. There will only be 2% more Bitcoin mined through processing next year. As opposed to 3% more gold out there.
Which gold has an inflation rate because we have an expectation of how much gold will be created. So gold has been tracking about 2 to 3% inflation rate. This will now be the first time that Bitcoin will have a lower inflation rate than gold. And I guess my point there is that I think you're going to see a lot of discussion over the next year between the gold bugs and Bitcoin, and a lot of recognition of Bitcoin as digital gold because of its lower inflation rate. And
Gotcha.
That's where I think you're going to start to see it be recognized as a new asset class. And let's also recognize that if we did have an investment product that allowed people to invest in Bitcoin, like we have for gold, you can invest in the GLD, which is an ETF. Mm-hmm. If you had that for Bitcoin, and you were to move just 10% of the market that is currently in gold over to Bitcoin, just 10% of it, you would increase the value of Bitcoin 10 times.
Explain
tenfold.
that to me.
So it just means that when Jack says 10%, so there's, argument's sake, how many trillions of dollars in gold?
Let's say it's 10 trillion.
Let's say it's 10 trillion.
So you
10%,
move 1 trillion into Bitcoin.
If you added $1 trillion to Bitcoin's market cap, it would.
Accordingly, the value should go up from, if it's 5,000 today, it should go up to 50,000.
Right.
Just by moving that small 10% from the gold
store of value.
Gold investments.
So that's market
to
cap,
Bitcoin.
though, right? So you take 10% of the gold market cap, you move it into Bitcoin market cap, and Bitcoin goes to 50,000.
And think of that. That's not that far. That's not that far blown. If you have a Bitcoin ETF, so an easy way for people to invest, and they're going to say, and their financial advisors are going to say, look, you've been putting money into gold as an alternative investment. Why don't you take half of that and put it into Bitcoin? And if you do that across the board, and you just take 10% of what is invested in gold and put it into Bitcoin, price goes up tenfold. So I think you're going to see that over the next year or so. The other thing that's interesting...
With the ETFs? Or ETFs can do that?
An easy way to invest. An easy way for the retail investor to invest.
My view is, even with ETFs, I hate to say that Bitcoin itself, as owning your own Bitcoin, having your own ledger, having your own wallet, is the best way to do it. You look what happens in countries like Venezuela and Iran. And the truth is, you could be sitting on a pile of gold, okay? There's no way you're getting it out of the country anyway. The currency goes to shit. You're trying to get out of the country, and how do you get your wealth out of there? It's almost impossible. Whereas Bitcoin, I have it on a ledger this size, and I can take it where I want, or I know what even if I lose this, I have pass keys and passcodes and the like, and I can access it anywhere I wind up.
And there are people that will say that an ETF for Bitcoin is not a good thing, and I can see the point, because you're kind of putting something that's a non-traditional investment into something that's a traditional investment. But from my perspective, to view it as an investment option for the individual investor, I think is good for somebody to put it in as an alternative asset and to have the ability to do that. Now, you can do it like RK says, and just do it on your own. But nobody on Wall Street is telling people to do it because they haven't made money. They don't know how to make money.
Right. But if you
mean go out and purchase Bitcoin on the Bitcoin blockchain, go to Coinbase,
right. Because if you think about it, right, one of the use cases for Bitcoin is in, collapse of a financial market.
Right.
Right. So what makes you think that if the market collapses, there's going to be a market for a Bitcoin ETF to be redeemed? Right, as opposed to
there won't be there, because it's not Bitcoin. It's a market for Bitcoin.
Right, but even it may have Bitcoin stored somewhere that's backing it up, but still going through that process. Look at Mt. Gox, how long it takes to fix that process, right, and the like. But whereas I'd say you put Bitcoin on your
that is the best way to do
wallet
it.
And move.
Yeah, that is the best way to do it. But the traditional investor is always going to look to investment products.
But again, but to your point is, you're not looking at a financial collapse. You're looking at an alternative investment that's a hedge against against a 20, a 10 or 20% decline in the market, not the market, shitting itself.
And I'm looking at.
I believe that's the technical term.
And I'm also looking at it in using the asset allocation models that we've grown comfortable with, which
are
to have,
what?
Well, you have stocks and bonds, and traditionally had the 60-40 model, and then after 2008, you had this introduction of alternative assets into the retail investor. So the retail investor will look at something from a 1 to 15% investment sleeve and invest in things that are non-correlated to stocks and bonds. Because what we saw in 2008, stocks and bonds, which traditionally had moved differently, they now both went down. So you wanted something that was non-correlated to protect at least a portion of your portfolio. So that's when alternative assets became big. Additionally, we're seeing endowment funds, they have portions of their portfolios in alternative assets for asset allocation. So that's where I think for the individual investor to get the alternative asset sleeve and utilize that for Bitcoin, I think is appropriate. One last thing on the halving, if I could. The other point about the halving is there have been 2 halvings done in the past. And when you look at the 2 halvings... By
the way, halvings, it sounds like some sort of weird
agricultural
ritual in a horror movie, exactly.
Yeah, but it's what it is. You actually cut the amount of Bitcoin that's available to you in half. The last 2 that have occurred, it is very, very interesting, and anyone can look at the chart on this. Very, very interesting is that we know when the halvings happened, and if you look at a year before the last 2 halvings, a year before that, almost to the date, you will find a bottom for Bitcoin. And then the halving happens, and for both halvings, about a year after the halving happens, it hits an all-time high. That has happened, those things have happened the last 2 halvings. Now, past performance is no guarantee of the future, but what we're seeing is, as RK mentioned...
That's what you tell your investors, right?
Well, it's
so,
that's yes. I used to have to worry about compliance. We have to do that with crypto. But now we're almost a year away from the halving. May next month will be 1 year before the halving. Could we potentially see a bottom for Bitcoin like we saw the last 2 halvings? Could we potentially see that? And the halving happens a year later, and a year after that, if we hold to what has happened the last 2 times, we'll see an all-time high. Remember, the all-time high that we've seen so far is about 19,000.
But why was it? Is there a correlation between the halving and the all-time high? Like, what's the reasoning for, after a halving a year later, there being a spike in the price of Bitcoin? Is there a logical reason that you can pinpoint to? What is it?
Well, potentially you can.
Not you, but someone. I mean,
Well,
anyway.
you could potentially be saying now we're recognizing it as more of a store of value, because the inflation rate on it has gone down, as we've seen. And
Okay.
I think potentially if that's a story to it, that's going to be even more compelling now, because it is now going below the inflation rate of gold, which is often held up as a comparison point. And I'm going back. I mean, people have theories about it, but I'm just saying it's happened the last 2 times.
Right.
Could it happen this 3rd time? Yes or no? Who knows? But it'll be very interesting to watch. And then you add in this ability for it to have a lower inflation rate than gold. And we're starting to see more acceptance of it, potentially a new ETF, and other financial firms wanting to get involved in it. There's a lot more inertia now, and a lot more happening, a lot more adoption, a lot more acceptance than we saw the last 2 times. So
Okay.
when you put all those things together, it's, we're very bullish on it, on Bitcoin.
Now, have you seen anything that you found as a reliable marker or tracker for value in Bitcoin? Is it there's a curve, obviously, it goes up and down. Does it correlate to anything? Have you been able to has anyone been able to figure that out?
Well, I know Chris has done a lot of work in the book, and a lot of people have done follow-up work. I mean, there are some.
Is that the Cryptoassets?
Yeah, yeah. In there, he has his valuation, and he's done a lot of work. We also see Willy Woo, right, of some of the valuation models out there, and there are some ways to take a look at it. RK, what do you think of valuation? What do you view there?
No.
Not at all.
Well,
It is.
Was there even a question?
Well, it is very tough. It is very tough to value it, and
it's-
there's no denying that.
It's an easy question. It's a hard answer.
Okay.
The point is that because what you're constantly trying to do is to, I mean, you think about how you value investments is discounted cash flows in future valuation, right?
Uh-huh.
No, I'm good. Thank you. So what you're trying to do is say, okay, how much of the transactions in the global economy do you expect to be transacted in Bitcoin over the next 25 years, and what's the growth rate you apply to it?
So that's one method.
And that's the only method. I mean, in truth, that's the only method. And everybody else, because you can't do that, you can't look at it like you look at a stock and it's like the same thing. You're trying to discount the cash flows and the earnings, and each day something happens that affects that, right? Yeah, a plant went down, or consumers' taste changed, and things like that. And the reason why the Bitcoin valuation fluctuates usually or previously so wildly, even though it hasn't been that wild lately over the last year, right, is because small changes in expectation of adoption or a use of a store of value and the like throws that valuation to ridiculous numbers up and down.
So small changes in expectation of adoption.
Yes.
Tell me what you mean by that.
Well, just mean if you say that if I'm thinking today that Bitcoin, to Jack's point is Bitcoin going to get 10% of gold's reserve status, and volume? Well, to Jack's point is if today I'm thinking it's 10%, and tomorrow I'm thinking, yeah, you know what, Bitcoin's actually doing okay today, and CNBC ran something that wasn't terrible, maybe it'll go up to 11%, and then you've just added $5 billion for Jack's numbers in terms of valuation.
Okay.
So as I'm saying, because you don't have that real history of adoption, and again, when you talk about adoption curves in Bitcoin and things like that, that's why a lot of these charts become parabolic,
Right.
because something, like I say, that's why you get estimates. Bitcoin could be 5,000, Bitcoin could be 50,000, Bitcoin could be $500,000, and you have people throwing those numbers out there, or you get the other guys that say, Bitcoin's going down to 0, and you know what? They're all right. They're all potentially right, right?
No.
But this whole idea of what changes Bitcoin on a daily basis is simply that oh, you know, an
So you mean
exchange.
no one knows? Is that that's
Yeah,
kind
no
of
one
what you're
knows.
Well,
Yeah.
you got to remember, this is a young
No one knows.
asset.
I mean, you think about it. Sorry to interrupt.
No.
You think about it. Oh, this exchange got hacked yesterday, right? Oh, so now does that change my idea of when adoption will be? Will it take an extra 6 months or a year to get that adoption? I thought because the negative news on the hack.
Now that
Yeah, same
tends
thing
to
with-
happen with
yeah.
stocks, but not with currency.
Well, sure.
Right, I
Well,
mean-
sure it does. What do you think? The trade deficit going up or down, or
But that's
or
always
tariff?
expected. I mean, you can follow that.
But the
You-
point being, look at Jack's discussion before. If the SEC came out tomorrow and said, you know what, we're going to let Bitcoin ETFs happen, that changes the whole model for use for adoption, store of value, and everything else. And Bitcoin, like that, would go from 5,000 to 10,000 or 15,000 overnight.
Did you guys see the April Fool's
Yes.
prank?
Yeah.
Yes,
Yeah.
yes.
I was more impressed by Justin Bieber's, being pregnant one, but that's okay.
Oh, I'm not a Bieber fan, so I don't know.
Really?
Yeah,
You're not a believer?
unlike others of us in this podcast.
I didn't know you were. Boy, the things you learn. The things you learn. I mean, I think the bottom line with this is this is a new asset class. Okay.
Yeah.
These knuckleheads that get up on CNBC and they start predicting prices and they start predicting where Bitcoin's going to be. No one knows. No one really knows for so many of the qualitative items that RK mentioned, but also we don't have the history of data that we need to draw conclusions related to Bitcoin.
Right. But remember, we were going over it. I know we're going to need to wrap up soon, but we were going over a chart a couple of weeks ago.
Oh, yeah,
at the
yeah, with the
presentation.
halving.
No,
Right.
no, not the halving. So the idea that about the volatility and things like that, but if you look at the last 6 years, okay, the yearly lows of Bitcoin, with all the fluctuations, everything on, the yearly lows of Bitcoin have been increasing. Every year, Bitcoin
Yes, that's
has
true.
a higher low than before.
Right.
You're
so,
right.
So you see the trend is up.
It's actually true, right? Because what Bitcoin was at 1,000 before 2017, right? And then it bounced around a bunch.
And went to
now,
1,300.
But it's been
1,300
steady
low.
at 4 for
and
a while.
And a low of 38 or something like that. Yeah.
Right. I mean, to me, see, I don't get the $20,000 or the $50,000 valuations of Bitcoin. To me, it's just so far from where it is that it just strikes me as
That's
too-
so far it was. It was there a year ago.
But it was there for like a day. I mean, how
Yes.
long was a month out of the entire year? It was that high.
Right. But if you
But
look,
when
if you look at the amount of, now, I agree that December 2000 or Thanksgiving 2018, that was the big discussion at every Thanksgiving meal type of deal. But not that many people moved on it. Imagine having that same conversation that you had in 2017 Christmas, right? Or Thanksgiving about, oh, Bitcoin's a great new thing. And people are like, well, I have to go set up an exchange and do something on a wallet and things like that. And wait, I have to take physical, I have to
Custody, possession,
right.
what?
Now what happens?
Yeah.
What happens if in 7 months now you're sitting around the table and you're saying, hey, did you see they're coming out with a Bitcoin ETF? Oh, really? How do I buy it? I don't know. Call your broker,
I'm going to put a little
Right.
bit of my account in it.
right?
I'm
you
gonna
don't
just
think?
put it.
And you think if it went to $20,000, it doesn't go to at least $20,000 again based upon that?
Right.
There'll be so many more people in it.
That's a good point. I never
No,
thought
that's
about
what I'm
it
here
that
for.
way.
I'm here all week.
You got
try to
Oh God, we're in trouble. He's here all week. I'm in trouble. We're in trouble.
Shrek
Try the
too.
veal.
See?
we
We're
we brought you here for a reason.
We're
That's
living
it
up
right
to crypto
there.
characters here. There. Right? Just because we're characters doesn't mean we have character. All
That's right. So all
Anyway.
right. So where do you think? So we've talked about halving. We've talked about ETFs. We've talked about Bitcoin as an alternative asset, and we've talked a little bit about valuation. Any overarching thoughts about any of these things or how they correlate?
I will say that how Bitcoin trades now and the volatility and things like that, those are basically, again, because you don't have the it trades off of real news. That's what makes the big moves happen. But the daily fluctuations are basically just like in the market. They're all technicals and algorithms, and that's what's driving.
You mean algorithmic trading?
Yes, yes.
Based on just technical indicators.
Technical indicators. Oh, it came down to its, it's down. It's going to bounce off its previous high, or it's hitting its, 20 or 50-day average and stuff like that.
Right.
And that sort of just turns the machines on and trades, right? So, like I say, we talk about Bitcoin having higher lows every year. That's a trend. That means it's in an uptrend. And until it has a low for a year lower than the previous year, it's still going up. And there's a lot of noise on a daily basis. I say ignore the daily news. Buy the Post.
He's actually, we're actually very big believers in the 200-day moving average.
Yeah.
Okay.
As an
I thought you were
indicator.
going to say the New York Post, but
No.
Well,
20-day
I know,
average.
it depends on what's on page 6.
The 200-week average is huge, and
why don't you explain what that is?
well, what it basically is.
And I say that pretending that I know.
Well,
I really have
because you
no
talk
idea.
about the in technical terms, everybody's concerned about the 20-day moving average,
Right.
the 50-day moving average, the 200-day moving average. Well, there's basically I like the 200-week average, which is basically 1,000 days.
Okay.
Right.
It's
Okay.
3 years.
It's 3 years.
Right.
Yeah, look at that. That's
Look
not
at that.
1,000
Man.
days. Look at him. Not just a lawyer. He could have been an accountant. But
But he made the right decision.
but
I definitely could have been an accountant. I could not have been an accountant.
but the Bitcoin has never gone below that average, and
Oh, ever. So it's
Ever.
never gone below its 3-year average. Is it
Ever.
3-year average or a 3-year low?
3-year average.
Okay.
Okay.
Moving average.
And
Moving.
it was back in a couple of months ago. What was Jack? I don't remember what it was. It had to be probably October, November last year, whatever.
Yes.
Right? Maybe. Okay. It hit that average. It was 3,800 or something like that. It hit that average, and then it bounced
right off.
Really?
Bounce right off of it.
Yep.
The other thing that I would also mention, I know we've talked a lot about Bitcoin, but there are 2,000 crypto assets out there. Most of them.
You were going to say characters, Ron, weren't you?
I was going to say shit.
most of them are garbage. But I do believe that the whole overall space of crypto assets is an interesting place to watch, because there are really some amazing projects that are being done through the use of crypto assets out there that are going to be transformative in the way that we do things, the way that we use the blockchain, the way that we live our lives going forward. So it's going to be important to watch Bitcoin, but it's also going to be important to pay attention to some of these other crypto assets out there, while being very skeptical of them. And if you view some of them as businesses and take a look at them as businesses and not just as get-rich-quick schemes, there are a handful of projects out there that are going to stand the test of time and be projects and businesses that people are going to be using for the next 20, 30, 40 years out there. I don't know who they're going to be. I mean, there are some that I think will exist here, will thrive, but there are many of them that won't as well. So it is an area to take a look at. Don't just focus on Bitcoin. The other thing I try to do when I build portfolios of crypto assets is to try and find if there's correlation there, because I do believe that when you find the quality crypto assets, you could build a portfolio, an investment portfolio, that is probably a large portion of it is Bitcoin, but there are other aspects to put in there. And it's always interesting to see the correlation between them, as well as some of the sectorization of these assets and what they can do. Things like, I mentioned Filecoin before, but there's an application about file storage that potentially could be something that we could end up using down the road. There's a crypto asset associated with that. I'm not saying it's Filecoin, it could be something else. So there are use cases out there and crypto assets that are out there that will really transform the way we're doing things. And there's some new ones, and hopefully when the SEC gets its act together and allows innovation to grow in this space, we'll start to see some more transformative technologies out there as well.
Okay, so as we round it up, let's hear your most important business lesson.
Well, I'll let RK go first there.
Yeah, my business is never go first. Jack?
And never go into business with your friends.
Never go out of business with your friends.
I guess you view it as a business. I mean, there are certain items that are in running a business that just work no matter what you're doing. You take away the crypto assets, you take away you know, all of these other things. A business is a business. You've got to satisfy the customer, you've got to bring in revenue, you've got to have a good workforce, you've got to have all these things in there. There's not a lot of difference just because technologies are different and because the funding models are different. Businesses are businesses. I mean, maybe that's, you know, and that's what got us a little bit away from looking at some of these ICOs and finding easy ways to raise money that was different from the old models, but still a business is a business. You've got to earn money, you've got to satisfy the customer. There are business rules out there that need to be followed.
All right. Okay, guys. Thank you very much for your time.
Thank you.
Thank you, Jason. It was a pleasure. Thank you for the vodka. Appreciate it.
Anytime.